What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have a new dividend stock that I bought. It's a solid dividend growth stock. As you know, I'm focusing on the financial sector and real estate sector probably for the next year or two. And this dividend stock is in demand. It's very popular. Its revenue is pretty good, actually pretty solid, not good. And what I like about it is the solid dividend growth. So I'll review this dividend stock. I'll explain to my rationales as to why I bought this dividend stock. And I like the potential of this dividend stock. So again, this is not financial advice for entertainment purposes only. Disclaimer in the description. Make sure you subscribe. Again, hit the notification bell so you don't miss future videos. A lot of you guys are asking me to do reviews on dividend stocks. And guess what? You miss it because you don't hit the notification bell. So let's check this stock out right now. And that dividend stock is Bank OZK. And OZK, O is in out, Z is in zebra, and K is in kite. That is the symbol, OZK. Dividend yield is 3.40%, a PE ratio of 8.89, average volume 698.62K, market cap 5.00 billion US dollars. G range is 34.79 to 51.39. Its day range is 38.63 to 39.64, and its previous close is 39.71. Now, what I like about this stock is, one, it's not doing too hot against the S&P in the past 5 years. The other thing is, I have stated, and I have said this numerous times, that I am focusing on the financial sector stocks and real estate sector stocks for probably the next year or two, because really they haven't done well against the S&P, and they haven't really rebounded since the pandemic. These guys took a huge hit. These guys are usually the sectors that take the biggest hits. And, it kind of makes sense because people are, little careful with how much money they're taking out because there's fears of, job losses and everything. And, there's a lot of fears of a potential recession. And they claim we're not in a recession, but I don't know. When you have the GDP going down twice, 2 quarters, that makes things interesting. But let's check out these guys as a company. So Bank OZK is a regional bank headquartered in Little Rock, Arkansas, with more than 240 offices in 10 states. Arkansas, Georgia, Florida, Texas, North Carolina, South Carolina, California, New York, and Mississippi, and 25.92 billion assets as of June 30th, 2022. Retail banking locations are in 5 states, including Arkansas, Texas, Georgia, North Carolina, and Florida. So right there, I already like this because they're big. Now, I like big bank stocks that have numerous locations because usually the bigger they are, the better the revenue, and the better the expansion, and the better of possibly acquiring other banks. So right here, it's in numerous states. This is what I like about that. Now, we need to check out their revenue. Let's start in 2015. This is in millions US dollars. 514, 2016, 764. 2017, 1,056, 2018, 1,208, 2019, 1,270, 2020, 1,185, a little bit of a dip because of the pandemic, and then 2021, 1,186. So there's a huge increase in revenue from 2015 to 2021. And again, when banks make a lot of money, whether it's a car loan, whether it's a loan on a business, whether it's a loan on numerous things, motorcycles, boats, just so many things that they make money off of interest. Don't forget credit cards. So anytime you swipe your credit card, they still get money because there's a fee. Like I always say as an example, there's a place locally over here that would only take cash as a grocery store. And I'm not going there just to pay a fee, to go to an ATM to buy, their products. Guess what? They had to adapt. And guess what? They had to take credit cards because nobody was going there. And people were frustrated because they had to go online. They had to spend, X amount of dollars to withdraw cash. So, that kind of blew up in their face for a little bit. And guess what? They're busier than hell right now with people shopping. So that's one thing that I wanted to address to you guys is how these guys are doing as a company. So there's a huge increase in revenue. This is what I like about bank stocks. Huge increase in revenue. You have to be a joke as a company to not generate revenue and to not do really well as a bank stock or financial sector stock. Usually, a lot of people learn their lessons since the recession hit. Now, the bank stocks were pretty much, and you can correct me if I'm wrong, they're pretty much handing out loans like it's candy. Now they're extra careful with that. So don't forget, people are buying houses, and guess what? You take loans out from banks, and banks make money from that. They have so many ways of generating revenue. Cars, I still don't understand how people are buying cars way past the Kelley Blue Book value, but guess what? They're buying cars. And guess what? People aren't paying them in time. And there's already reports of credit card debt being crazy right now because of an incoming recession that everybody's worried about. There's a lot of things that are a little bit out of control, and these guys are generating revenue. Now, the one risk with these guys is a company, of course, student loans, you cannot, file for bankruptcy and, be fine. But banks, if you file for bankruptcy, they take a hit. So they're a little bit smarter than they were before, and they adapted based on what happened. So that's one thing that blew up in their face, kind of with real estate taking a big hit. You can't pass out, if somebody makes $20,000 a year, how can they afford a $50,000 house? And then you have to worry about other things. So they kind of caught on there. So that's kind of one thing that happened. And again, if you're a financial analyst or whatever, sure, you can correct me if I'm wrong, but that's pretty much the way I saw it. Now, let's check out their dividend history. And the dividend growth has been solid. So check this out. 2018 is 21 cents, 22 cents, 2019, 23 cents, 2019, 24 cents, 2019, 25 cents, 2020, 26 cents, 2020, 27 cents, 2020, 28 cents, 2021, 28 cents, 2021, 29 cents, 2022, 30 cents, and then to 31 cents, and then to 32 cents, and then to 33 cents. So the dividend growth in 5 years is 12.06%. Number of dividend increases in the last 5 years is 20. The payout ratio is 29%, which is attractive. So if you bought one share, you made 132 with a 3.32% dividend yield. So I am focused on dividend growth stocks and high income stocks. This is a pretty solid stock, which again, with the dividend growth in 5 years at 12.06%, that's what attracted me to the stock. So I'd like to give you guys credit. I went live yesterday and somebody mentioned that, and I actually wrote it down and I reviewed it, and I'm like, this is so good that I'm going to buy it. So thank you for that. That's one thing that I can benefit is for tip-offs from you guys. And again, we're not pumping stocks. I'm just doing reviews and not giving financial advice for entertainment purposes only. You guys have been amazing regarding, even for me, to find dividend stocks and do reviews on dividend stocks. And I like them so much, I buy them. So I added these guys to my M1 Finance dividend portfolio today. And I'm really excited to have these guys in my dividend portfolio and then get to hopefully 100 shares or beyond, because these guys are a steal right now. They're not doing well against the S&P. They kind of remind me of Jackson Financial price-wise and dividend growth-wise. So I know Jackson Financial is a little bit different, but still, I'm very attracted to these guys as a stock. And I'm going to try to squeeze in a video tomorrow as to a new dividend stock that I bought for you guys. And you guys recommended that, and I liked it so much that I had to capitalize on it. So let me know what you think of this dividend stock. This is a pretty good one. I'm kind of glad that I sold FLK. And I correct myself, not FLK, HTBK. I'll explain to you why I sold those guys, and I'm glad I bought these guys instead. Look at HTBK. 2015 it was 8 cents, then 9 cents, in 2017 10 cents, in 2018 11 cents, 2019 12 cents, 2020 13 cents. It hasn't grown at all. So the payout ratio is 53%. The number of dividend increases in the last 5 years is 3. Dividend growth in 5 years is 5.01%. That's not very attractive to me. And if you bought one share, you made 52 cents with a 3.89% dividend yield. The dividend growth kind of sucked. So I had to compare and contrast it with other dividend stocks to buy other dividend stocks and get rid of these guys. So I wasn't happy with that. Stocks like Huntington Bank shares are way better. Why I kept Huntington Bank shares and Key Corp, because the dividend growth was solid and these guys appear to be better companies and they're bigger. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. You guys have a good one. And like I said before, this is not financial advice, for entertainment purposes only. Disclaimer in the description. And I'm going to try to post a video for you guys tomorrow. Take care.